Hey, what's up guys? John here. Barry Starlight, the founder of Starwood Capital, a multi-billionaire, a real estate investor, and real estate speculator. He's done extremely well in multifamily, single-family, hotels, really just dominating the real estate sector. Now he's issuing this dire warning to the housing market and to all new first-time home buyers, real estate investors, and other real estate developers and speculators. What I believe he is saying has a lot of merit. And then we're looking at what's happening right now with Open Door, a real estate and technology company. This company now is suffering massive losses due to their investment across real estate in America. In this video, I'm going to walk you through exactly what's going on so that you can take in this data and digest it and see, is this the time to buy? Is this the time to wait? Or is this the time to build cash reserves and build out a plan and a strategy to pounce on distressed real estate? Because I think that is definitely coming very soon. Please hit that like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the housing market. Take a look at this. Housing market heading for a major crash, billionaire CEO warns. The CEO of a private equity firm, Starwood Capital, has warned that the American housing market faces a major crash. On the CNBC Squawk Box on Thursday, he spoke about upcoming and ongoing issues in the economy overall and the housing market. He said the consumer price index, the data they are looking at is old data. All they have to do is call Doug McGillen at Walmart. Call any real estate fellas and ask what is happening to apartment rents. I've warned about this for a very long time. The last year, a lot of people said no, rent's only going to climb. The economy is breaking hard. CEO confidence is also miserable. 500,000 single-family home sales. New sales is the lowest since 1952. You're going to have a major crash. So in 70 years, this is the lowest. Think about what that means. This I'm telling you guys, this is going to be the straw that breaks the camel's back in the housing market. It's home builders getting crushed. It is labor costs going through the roof. It's mountains of debt. It's the labor market that's falling apart as well. It's interest rates going from 3% to 6.5%. The stock market is getting pulled back. Retirees, people with 401ks, everyone that thought that they had their retirement set up, they're now questioning it all. Everything is changing rapidly across the entire economy. Nothing is staying the same. Whether it even be home insurance prices going up, utility bills going up, everything is changing. And there's no way that everything is just going to move through all these problems without an absolute tornado of economic hell coming. Consumer confidence is terrible. Where will that show up? It will show up at Christmas. Christmas, if you had a survey, the consumer, half of the people will spend less this year on goods than they did last year. 20% of people will spend 50% less than they did last year. They are doing this against piling up inventory. Inventory is moving rapidly higher. Companies bought goods thinking that pandemic behavior would last forever. Outside of renting, purchasing homes has become more expensive across America. House prices across the nation rose 17% in the second quarter of 2022 compared to the same period last year, according to the Federal Housing Finance Agency. The FHFA HPI is a collection of house prices index that measures changes in single-family home values based on data from all 50 states, over 400 cities in America. Compared to the first quarter of 2022, home prices went up 4% between April and June. Skyrocketing prices and soaring mortgage interest rates have combined to make the market purchase of new and existing homes unaffordable for many potential home buyers. The trend is reflective of FHFA's HPI. For the second quarter of this year, the agency's seasonally adjusted monthly index for June is up only 0.1% for May. House prices grew quickly through most of the second quarter of 2022, but a declaration has appeared in June's monthly data. As supervisory economist of FHFA's Division of Research and Statistics, the pace of growth has subsidized recently, which is consistent with other recent housing data. And that same gentleman, Barry, looks to unload 3,000 homes for $1 billion, right? 3,000 homes for $1 billion. And each expected portfolio is to get about $500 million. And even at the end of this, he would still hold 10,000 single-family homes. More home builders, lower prices as sentiment falls for the 9th straight month. And I mentioned this before, what I think is going to happen very soon, as these home builders, they can only reduce their prices so much. They can only do it so much. And then it's just going to get to the point where they only have one real option. It's either to rent them themselves list it for lease and try to service the debt that they have on these properties through the rental income, or it's going to be to sell, and then the buyer of those properties is just going to rent them out, right? There's no way that there's any other alternative. And this is a really, really shocking situation with Open Door, because Zillow went through a very similar situation about 12 months ago or 10 months ago, where they had to liquidate thousands and thousands of homes. They sold roughly 2,200 homes to Pretium Partners based in South Florida. That company alone owns almost 100,000 homes, between 80 and 100,000 single-family homes in America. We're seeing this massive transfer. What's going to happen with Open Doors Real Estate? It's a big question. Do you think they're going to list it on the open market and pay a broker 6% or 5% plus carrying costs and closing fees and all that? No. I can almost promise you they're going to unload all that bad debt onto a private equity buyer, onto a deep-pocketed investor who can write a 10-figure check or a 9-figure check and start buying up properties by the thousands. That's what's going to happen. When these institutional investors acquire properties, that they're gone from the housing market for the everyday buyer. They're gone permanently, at least for the next 10 years probably. But at that point, that's probably technology and all the advancements that are going to happen in society. The money just going to flow up into the hands of tech companies, private equity firms, robotics firms, all these big companies. They're just gaining more authority over the coming years. What's going to happen is they're obviously going to want something more than just fiat currencies. They're going to want hard real assets. So there's going to be a chase to acquire these assets. The company, which sells thousands of homes in a typical month, lost money on 42% of its transactions in August, according to research firm Yippee Data. Open Doors' performance, as measured by the prices at which it bought and sold properties, was even worse in key markets such as LA, where the company lost money on 55% of sales, and Phoenix, where the share was 76%. A representative of Open Door declined to comment on the figures, which don't include fees charged to customers or expenses incurred in renovating and marketing homes. Open Door's rocky summer is reminiscent of the pricing problems doomed by Zillow's group iBuying business last year, according to new research note from Michael Dupret, a scholar in residence at University of California, Boulder. That doesn't mean Open Door is going to shut down the business, but it demonstrates the depth of the losses in September is likely to be even worse in August. Well, there's no doubt. Rates have been skyrocketing, and we have another rate hike coming very, very soon. As rates continue to climb, the value of these assets are going to fall with it, because they're just going to be a higher value in which private equity firms can seek with the cash that they're holding. When rates go up, there's more options for investors that have money. When rates are low, all investors are chasing the idea of borrowing cheap debt and leveraging wealth, right? We are going to see this situation with Open Door likely get a hell of a lot worse. Open Door's metrics are in a dangerous zone, Delpret said in an interview. They are very close to where Zillow was in the worst moments. This is only just the beginning. We're going to see a lot more problems coming across the housing market coming very, very soon. A lot of people thought that Wall Street couldn't lose money. Like these Wall Street players would not lose money. The problem is when there's so many big players that own thousands and thousands of homes, many cases tens of thousands of homes, they're the whales of the housing market. They can manipulate the market. They can list properties at prices that are above or below market value. They can list rents above and below market value, impacting mom and pop landlords and everyday single family investors. They have the authority, but that authority is likely only just going to grow. But you think about what this means if, say, 1 million or 2 million houses are owned by, institutional firms. If they were to go into a market and buy up, 30 or 40 or 50% of housing stock, they could easily increase or decrease one's net worth based on their decisions. Big changes coming to the housing market, big changes coming to the economy. What do you think about this situation? Do you think we're walking into a problem in the housing market, a real big problem, and a problem in which it's only going to benefit the deep-pocketed investors long term? However, if you are a smart and savvy new investor and you want to buy real estate, make sure you have a plan. Make sure you have a strategy. You have the cash reserves. You're pre-approved for a loan. Like you have everything locked and loaded. Because one thing I've learned over the years of being in real estate is that people always say, I'm going to buy when the market crashes. But then when the market crashes, people say, oh no, it's going to crash more. It's going to crash more. I'm going to wait. I'm going to wait. I'm going to wait. And they never end up doing anything. So if you are one of those buyers that want to buy when the market changes, get everything in line now. Get it all ready now. Understand exactly what your goal is. The way that I like to look at real estate is you look at a property almost like a vessel. That vessel is going to drive you, take you to a certain destination. You're looking for a property to be that vessel, that vehicle, to get you from point A to point B. So you think about what your next step is going to be and what the purpose of that property acquisition is, and you make sure that you're going to buy a deal that's going to make that possible. If you don't know what that looks like, you can go to thisisjohnwilliams.com. You can drop it below in the comments. We could talk about it. Make sure your credit is in good shape. You need help with your credit score, go to cashnow.video. And catch you guys in the next video. Subscribe here and on my second channel. It's an interactive call-in show. And also I'm having 2 private equity guys come on this Thursday and the following Thursday. So be sure to subscribe there if you want to learn about real estate and get some really great insight. Be sure to subscribe over there. And LinkedIn, Twitter, Instagram, and TikTok up in the banner. I'll catch you guys in the next video.